This legislation permits the state treasurer to invest up to 5% of public funds in digital assets with a market capitalization exceeding $500 billion. This is better than the federal Bitcoin strategic reserve, right, which is not allowed to invest the public's money. Pretty wild that this happened.
Welcome back to The Weekly, Bitcoin.com's no-nonsense recap of what actually mattered in crypto this week. I'm Graham Stone here with David Sensel, and today we're looking at a shifting landscape where real adoption, regulation, and consolidation are starting to overtake the noise. On deck for this week's show, we've got Washington stumbling as the Genius Act stalls in the Senate. Was it politics, incompetence, or maybe something deeper? We'll get into that. We got Stripe and Meta quietly laying out the foundation for mainstream stablecoin adoption, while Ripple warns the U.S. is falling behind. The first U.S. state-level Bitcoin reserve was established in New Hampshire. We'll get into that, including our thoughts on who might be next. XRP is staging a comeback with ETF inflows, regulatory wins, and a $1.25 billion prime brokerage acquisition. And finally, we got an update on Coinbase, which is making a serious play in the crypto derivatives space, moving to buy Deribit. Before we dive into it all, hit follow if you haven't already, and check out David's newsletter, which you can sign up for free at Bitcoin.com. It's the fastest way to stay sharp on crypto without spending your whole weekend scrolling through Twitter. All right, David.
To start off, let's talk about this Genius Act and the fallout from that. So on May 8th of last week, the bill failed to advance past a key procedural vote, securing only 49 of the 60 votes required to end debate and move forward. This shortfall was due in part to opposition from several Democrats and a few Republicans. Boo, boo. So Ripple CEO Brad Garlinghouse criticized the U.S. Senate's failure to advance the Genius Act, warning that the lack of clear federal regulation is hindering the country's ability to benefit from the rapid global growth of stablecoins. Treasury Secretary Scott Bessent echoed this sentiment, calling the vote a missed opportunity to reinforce dollar dominance and urging lawmakers to act swiftly before other nations take the lead. Despite this setback, the Genius Act is not necessarily defunct. Under Senate rules, legislation that fails a procedural vote can be reconsidered. Senate Majority Leader John Thune has taken steps to allow the bill to be brought back for another vote in the future, indicating the discussions and negotiations are ongoing. So this is a pretty big deal, and I think it's a pretty decent setback. The U.S. definitely needs clear regulation around stablecoins, and I was a bit surprised at this outcome. I was also a bit surprised by Brian Armstrong's post on X after the failures. So he made this post that not just me, but a lot of people found strange. Let me read the whole thing for you guys. He said, "Great progress on U.S. crypto legislation this week, and more to come next week. Market structure draft legislation introduced plus discussed. Bipartisan work continues to bring stablecoin legislation to the floor, likely voting again early next week. Stand with Crypto Day happening 5/14 next week with 60-plus crypto founders coming to D.C. Advocates will keep beating this drum. One thing is clear, both sides care deeply about getting clear rules for crypto and getting it right. Both sides are leading and engaging. After years of being sidelined, crypto isn't just at the table, it's on top of the agenda." As I said in Token Narratives, the most recent Token Narratives, what is he talking about? What is this bipartisan malarkey? What is this both sides care deeply about getting clear rules? The Dems defected. The Dems didn't allow this to go through, basically. I don't understand this, and I wasn't the only one who had this reaction. Ryan Selkis, the founder and former CEO of Messari, he criticized Coinbase and Armstrong and Stand with Crypto about their lackluster support of the Genius Bill leading up to the vote. All of these people were kind of silent leading up to this and only said anything after the failure. Nick Carter, who is a far less controversial figure than Selkis, he reacted to Armstrong's post with just question marks. Question mark, question mark, question mark, question mark, question mark. What is this man talking about this bipartisan stuff? I think that this is not very good. Graham, what do you think is going on here? Is this just garden variety politics? Dems who are courted by Stand with Crypto and companies like Coinbase are defecting at a politically opportune time, or is Coinbase's Armstrong purposefully scuttling the bill, as Ryan Selkis thinks, in favor of something that would protect incumbent U.S. stablecoin issuers like Circle, which currently doesn't really have a moat and will get eaten away if kind of bills like the Genius Act pass? Or can all of this be explained by simple incompetence? What do you think?
Well, never discount the prevalence of incompetence in politics. So I would say that, but I don't think there's some kind of like a shadowy cabal here. I do think that this is just like, I don't know, like DC politics, and it's probably turbocharged by the whole Trump family thing. And I mean, look, we had something happening in the UAE with a $2 billion Trump family stable coin deal with a UAE fund. And the Dems who had been backing the act, they bolted after that news was broken. So that made it like politically expedient for Maxine Waters and others from the anti-crypto army to sort of just like walk out of the discussions and call out sort of crypto corruption. Yeah, I mean, the Dems were, definitely political expedience there. But also, look, I'm not like an expert on how things work in DC. But from what I understand, the Republicans kind of got a bit of an own goal here. They tried to jam the vote through. The text wasn't final. So 2 Republicans voted against it, and it failed by 1 vote, 49-48. And then on the Coinbase front, normally they would probably have been pushing a bit harder for this thing, like rallying the troops to make sure everyone votes correctly. But maybe they weren't doing that as much as they normally would, because Coinbase earns half of Circle's U.S. Treasury holdings, the float that they have in USDC. Coinbase earns half of that. So they're kind of happy with things the way they are. They're okay with the good regulation, better improved regulation, or like clarified regulation as well. But I think they're not like super gung ho about getting this thing passed. So the end result is it just didn't go through. It's probably going to eventually go through, but at this point, the end result is that the U.S. still doesn't have a stablecoin bill. Meanwhile, other countries are moving ahead, and it is what it's a continuation of what we've seen here for years.
Other countries are moving ahead, but it doesn't really matter, because America is the only country that can issue dollars, right? And so it does matter quite a bit that the one place in the world where the currency that backs all these stable coins is issued or doesn't have clear regulation. Your answer is very, moderate and even what do you say, like even-minded, even-keeled, but not very exciting. So I like to think that there is a shadowy cabal, and that bald-headed Brian Armstrong is really a villain. he's a classic villain with a cat, and he's trying to scuttle this to help his own companies. But yeah, I mean, you're probably right. It is probably something boring like incompetence and political selfishness, and that's probably explains most of it, unfortunately.
Yeah. Is this a crypto punk, by the way? Is that Brian Armstrong's?
Yeah, I think he is rocking a crypto punk. If I recall, he was late to the punks. Don't quote me on that.
So
he might have been early.
Overpaid for it.
He used some of that Coinbase IPO money that he got to purchase a crypto punk.
All right.
Whatever's on base.
Let's move on. So, like, on the one hand, we have the stablecoin legislation stalling. On the other hand, we have actual businesses in the space moving ahead full steam with stablecoin implementations of one kind or another. So first up, Stripe has announced that they're letting businesses in 101 countries hold and send stablecoins, specifically USDC and USDB. I'm not sure what USDB. Do you know which one that is, David?
No, I don't. USD booty?
USDB.
I have no idea.
This is on the heels of Stripe acquiring the infrastructure firm Bridge. It's being pitched as a lifeline for entrepreneurs in unstable economies. And I think it's pretty clear that this is a bet on stablecoins and AI as the twin engines of fintech's future. Then we have another report here from Meta, which famously was the first to try to move down the stablecoin path with the Libra project, now defunct. But they're
RIP.
back, and yeah, they're exploring stablecoins for paying creators globally. The idea again is to dodge the currency exchange headaches and gas fees, and yeah. So Libra's dead, but this time they're back with more pragmatic, just stablecoin rails, and it signals renewed interest. Then the third one is Ramp, which we don't have a story for from Bitcoin.com news, but Ramp also put their hat in the ring. And Ramp, by the way, is a neobank, I believe.
Yeah, neobank maybe on and off ramp as well.
Yeah,
on and off ramp. Ramp.
That's right. They partner with Stripe to launch a stable coin-backed corporate card. So Ramp, Stripe, and Meta all in on stable coins. And some commentary here. Bitwise, which is an asset management firm, one of their senior investment strategists, Juan Leon, noted on X that the mainstreaming of stablecoins is about to unleash escape velocity for crypto adoption.
Escape velocity.
Escape velocity. So, yeah, his conjecture is that Web 2 is finally onboarding Web 3 quietly but irreversibly. Any comments, David?
So we've talked a lot about how stablecoins are pretty much the only use case for crypto right now. And here are further examples of traditional companies kind of getting involved. A couple comments, just like you wouldn't necessarily feel sorry for Meta, billion-dollar company, but man, they were ahead of their time and they just got pummeled by the previous admin for going in this direction, and now you see everybody's going in this direction, and so it is kind of funny that they got kicked in the teeth for this early on.
Certainly an indication of how far we've come.
Yeah,
nobody's complaining this time around.
Yeah, the second thing is just I don't know, as a copywriter myself and author, I don't know if I like this use of escape velocity. The mainstreaming of stablecoins is about to unleash escape velocity for crypto adoption. To achieve crypto adoption, you need to stablecoins are the thrust basically to achieve. Wait. So no,
look, I don't hate this because I think it points at the cold start problem that networks have. Right,
I get it. But let's just think of the metaphor. So you're escaping from not adoption, right? So the planet, you have like a planet of not adoption, of not crypto adoption, and you're escaping that, right? You have, that's what escape velocity is, to get to
cold starting the network, to
get beyond the gravitational pull, gravitational well of crypto not adoption, and to achieve crypto adoption. Again, it just seems like maybe not the best way to illustrate this point if you think about it. Again, just being a little nitpicky, I think maybe escape velocity is a weird, in my mind, it just looks a little weird. That's all.
Okay, then, so to the copywriting team at Bitwise Asset Management, if you guys need any help with your metaphors, David's always here.
I'm always here. I'm always on the prowl. I'm always on the case. Okay.
All right.
Right.
Let's move on.
Let's move on to these Bitcoin strategic reserves announcements. In retrospect, this is probably the biggest news of last week, maybe the most important news of last week. We had not one, but two Bitcoin strategic reserves enacted in the U.S. from U.S. states. Again, pretty crazy. This is the first time that a state has adopted a strategic Bitcoin reserve, and we didn't have one, we had two. Within 48 hours, two U.S. states enacted this legislation, New Hampshire and Arizona. On May 6, Governor Kelly Ayotte signed House Bill 302 into law, making New Hampshire the first U.S. state to authorize a strategic Bitcoin reserve. This legislation permits the state treasurer to invest up to 5% of public funds in digital assets with a market capitalization exceeding 500 billion. This is better than the federal Bitcoin strategic reserve, right, which is not allowed to invest the public's money. Pretty wild that this happened. And then on May 8th, Arizona Governor Katie Hobbs signed House Bill 2749, establishing a state-managed Bitcoin and digital assets reserve fund. Unlike the New Hampshire approach, Arizona's fund is designed to be budget neutral. That wording should remind you of the federal one and Trump's executive order, budget neutral, comprising unclaimed digital assets, staking rewards, and airdrops held by the state. There are roughly 18 states that have active reserve bill initiatives in committee or waiting floor votes. Conversely, Florida recently withdrew 2 key bills after legislative resistance, showing that this is still somewhat controversial in different political regions of the U.S. Based on where everything stands today, Texas is by far the front runner to be the next state to formally establish a strategic Bitcoin reserve. So it has Senate approval. On March 6th, the Texas Senate voted 25-5 to pass Senate Bill 21, which would authorize a small allocation of public funds. 3 days later, the House introduced Bill 4258, proposing a $250 million carve-out for Bitcoin and other digital assets. And so Texas is the most likely one to do it next. But I think you're going to see this kind of cascade in the U.S. Once you have these initial states go through the process, you'll probably have a quick follow-through with many states. And then the very blue states, I think, will be kind of the last to do it. I'm looking at you, New York, and maybe California.
Yeah, so New Hampshire, that's the state with the snake, and you don't tread on it, right?
Maybe. I don't know my U.S. states very well. Probably.
So
You're good at this kind of thing.
I think it is. So kind of fitting, perhaps, that New Hampshire is the first state. Now, of course, they haven't actually purchased Bitcoin, and they're not allowed to do anything for 60 days. And also, it remains to be seen whether they will actually purchase Bitcoin, but they can now, according to this law. So the opening salvo has been launched. We're off to the races.
I really am excited to see what New Hampshire does. I think it'll be kind of an important test case for not what states do, but sovereigns. We've talked about this before leading up to Trump's executive order on a strategic Bitcoin reserve. But how does this work where a government says that they can buy Bitcoin? Do you start to see front running? And I just want to see how this works out. So I hope that they buy some Bitcoin. I want to see how this works, right? And then, if other sovereigns other than the U.S. start to buy Bitcoin, if they have to pass legislation like this to do so, again, you'd expect massive front running. And hell, I would jump in the ring with some front running of my own. So it'll be a good test case to see how this works, how this plays out.
Yeah, definitely. We're going to be keeping a close eye on New Hampshire, whether they actually make the purchases, and of course, what states are next. So, David, let's move on here. I have a question for you. Excluding Bitcoin, what do you think is the most standout cryptocurrency so far this year?
Oh, I don't know. Fart coin, maybe?
It's XRP. It's XRP, baby.
What?
Yes, XRP crushed it in Q1, outperforming BTC, ETH, and Sol with a 50% rally in February. On the ETF front, XRP had $214 million of inflows year to date. That's just $1 million shy of Ethereum. You got new ETFs, Franklin Templeton, US spot filing, Brazil's CVM approval, CME futures, volatility shares, X3 products, a few others. Then we got Ripple buying Hidden Road for $1.25 billion. This is one of the largest crypto M&A deals ever. Hidden Road, by the way, is a prime brokerage platform that serves institutional clients trading digital assets, FX, and other markets. You can think of it like a crypto native equivalent of a traditional Wall Street prime broker. So it provides access to liquidity, handles credit intermediation, and streamlines post-trade services for funds, market makers, OTC desks. So buying Hidden Road enables XRP Ledger to power post-trade ops like FX swaps and repo. Ripple's stablecoin RLUSD will be used as collateral. Then on the regulatory front, we've got the SEC, of course, dropping its appeal, slashing Ripple's fine from 125 million to 50 million, and then just broader regulatory tailwinds with for example, the SAB 121 being repealed, the OCC and FDIC softening. So XRP killing it.
Yeah. The only thing I would add to that, I mean, I think 100% on all of that is if you are into male astrology, aka TA, Ripple or XRP has one of the sweetest looking charts in crypto right now. It is a beauty, and so it has all the makings of a next leg up. Now, going back to what you started with, the XRP ETFs, you could make the case that XRP is becoming an institutional asset class here, and not just a speculative mid-cap. It could be kind of breaking away from the mid-cap cryptocurrencies that it's been with, And the ETF inflows rivaling Ethereum, Franklin Templeton's filing, plus XRP being talked about as serious money in this conversation. I don't know. This does seem like XRP ETF content is pushing XRP into the major leagues.
Yeah, and the buying of Hidden Road, so they're getting deep into institutional financial plumbing with that one. It's like back office market structure stuff. I don't really understand it, but it's bullish. It's bullish. They're making smart acquisitions.
So from the news angle, we covered the SEC fight with XRP for many years. And it's pretty wild to see how it's actually turned out and how all the experts thought the XRP was going to be drawn and quartered and kind of destroyed in this. And it's quite the opposite. Ripple's legal saga is finally winding down. The SEC's retreat is a clear signal that the regulatory environment in the U.S. is becoming friendly under this new administration. And this is great for XRP, which I think from a price perspective has been suppressed for a long time because of this. And with the regulatory road clear going forward, you'd assume that there's a lot of upside left in this.
Yeah, and then finally, just on the Ripple stablecoin RLUSD, so it's now collateral for Hidden Road's institutional suite. So while everyone else is watching Circle and PayPal, Ripple just snuck their stablecoin in through the back door through this clearinghouse play. Quite interesting. Let's move on to our last story for the week. Coinbase is acquiring Deribit, the world's biggest BTC and ETH options exchange, and they're going to be buying it for $2.9 billion in cash and stock. Deribit, by the way, controls 85% of global Bitcoin options, and in 2024 they did 1.2 trillion in volume. So this deal, which needs to be finalized or whatever, confirmed, it has to go through regulatory approval. It would catapult Coinbase into the top tier of global crypto derivatives trading. And I think as mentioned or as discussed in this show, it follows a broader consolidation trend. You have all these crypto companies making merger acquisition plays. Another one that wasn't mentioned in this week was Kraken's $1.5 billion buyout of NinjaTrader, which happened in March. Deribit, by the way, is licensed in Dubai, and so that aligns with Coinbase's Middle East expansion play. Yeah, what else? Anything else to note on this one?
I mean, I think the key word here is global. Deribit is a global crypto derivatives trading platform, and Coinbase, which has primarily been focused on the U.S., is now really trying to reach out. So this is important, I think, for their expansion plans. The second thing is you want to talk about how important derivatives are for crypto. And it's been, I think, a pretty big weakness of Coinbase so far. Derivatives are very, very popular. That's an understatement. Look at Robinhood and TradFi and the perpetuals in crypto. Spot markets are flat, but derivatives drive most of the crypto volume now. And it's important for Coinbase to get in on this. Not only are they kind of making a play to catch up, but they are, I think, importantly, getting ahead on an aspect of the crypto market which has been lacking. Options are huge in TradFi, but in crypto, perpetuals have been the mainstay for getting leverage and for expressing your opinion with derivatives. So options are probably going to be where you see the most growth potential in crypto going forward. And so, yeah, they're kind of leapfrogging where they were before to hopefully where they're going to be.
Yeah. Coinbase's stock pumped a little bit, I think, on this news, maybe 5%. Currently, it's at a $50 billion market cap. I've heard calls for Coinbase to be a $1 trillion company.
Good Lord.
What do you think, David?
$1 trillion, huh? I guess so. You have to have that escape velocity to crypto adoption, a significant price appreciation of Bitcoin itself to get there. But yeah, I mean, I guess $1 trillion doesn't sound too over the top when you consider the likelihood of money printing coming in the next couple decades. So yeah. I could see that. What do you think?
Yeah, I mean, this does seem like a smart play for Coinbase, setting themselves up here for in the derivatives markets. And we've got about 4 or 5x from the bottom in terms of the price of the Coinbase stock. The bottom being late 2022. And if I mean, the chart's looking pretty good. It doesn't. Yeah, I'm not a TradFi investor, but Coinbase, I like the stock.
I think, you don't have to. Probably this year, maybe next year, you'll start to see traditional stocks being offered on Base, most likely, I'm guessing. I've heard rumors, or not rumors, I've heard about different projects that are bringing tokenized stocks to Base and Solana in particular. So I think it would be awesome to, if Coinbase offered Coinbase stock on Base, and I would absolutely pick some up without a doubt. But
yeah, I'd love to be able to trade stocks on crypto rails. That'd be amazing.
Absolutely. Yeah. With your stable coins.
That's right. Okay, let's wrap it up there. That's a wrap for this week's recap. Keep an eye out in our socials for details on our 1-year anniversary of our other live stream that we do every week, which is our Token Narratives podcast. We're going to be giving away $1,000 in prizes to our community.
Good Lord.
Including cash prizes for people who ask questions in the live stream on X. So keep it out on our eye out on our socials for details of when exactly we're going to be doing that live stream. Don't miss it. Earn some money.
Token Narratives. We're trying to reach escape velocity to podcast adoption.
All right. That's it. We're out. Thank you. See ya.